It's that time of the quarter yet again. SoFi will report earnings Tuesday, so here is a little prediction video plus a recap of what has happened with SoFi. Now, my last SoFi video was this might be the last time you will buy SoFi under $10. I know we've been seeing these types of titles for quite a long time, but I guess the timing was quite good on that one. Anyways, this is basically SoFi's track records for, well, since it went public, with regards to sales versus estimates, beats across the board. With regards to EPS, there were some rare misses here, although some might say that these are not correct, but okay, these are misses of 1 cent each. Overall, we know that SoFi is a company that usually beats their own estimates quite comfortably and then raises guidance. This is what we've seen with SoFi, well, for the last couple of quarters. And now that the stock is above $10, maybe finally we might get a bigger squeeze if the results are better than expected and if guidance is even better as well. Right now, short interest sits at 17%. And as you can see, over the last month, the stock is up 40.3%. Yes, it's true. Year to date, it's been underperforming. We're only up 10.45%, whereas the market, I believe, is up close to 20% or so, or close to that number. So yeah, SoFi has been underperforming throughout the year, but in the last month, it has been outperforming, and I think that's going to continue. So let's talk about SoFi in the quarter, and let's talk about my predictions as well. If you enjoy this type of videos, leave a thumbs up, subscribe. If not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I'll start with the harsh reality here. So maybe you've seen this screenshot on X. The harsh reality is that, well, retail is usually the one FOMOing in. So fear of missing out, meaning buying when the stock is going up. What we've seen here is that retail sells when it's at $8 or even less, and then starts buying when it's above $10. I don't know why this always happens, since SoFi is a very, well, retail, let's say, concentrated stock. I've talked about this stock for quite a long time on the channel. Lots of other people have been talking about SoFi as well. So I don't know. I think I've been doing a good job educating people on SoFi, the stock, the sentiment. I mean, I'm not an investing god, but I've always said the same thing at $7, $8. It's a broken stock, not a broken company. But yeah, I guess retail still likes to buy the top and sell the bottom. Now, when we go and look at the results for Q2, these were basically the numbers. So new members added 643,000. The CAC was $287, which was better than Q1. Galileo Q2 revenue, $95.4 million. It's in red because it was below my estimates, which were above $100 million. Q2 net revenue, $597 million, and adjusted EBITDA of $138 million. And then deposits, $1.4 billion. Yes, it looks low, but that's because time deposits expiring, and maybe that can happen again this quarter. And if they don't get replaced, then yes, you're going to get this number coming in lower than what you were thinking. Now, the last time I made the prediction video, SoFi was at $7.43. At the start of this year, they made a prediction, or that was their goal, to add 2.3 million new members in 2024. That equals 575,000 new members every quarter. Currently, we're at 1.26 million members that were added in this year, so only 517,000 left for the next 2 quarters. And as we've seen, last quarter we added above 600,000, so some would say that we expect that number to be exceeded, right? The 2.3 million members for 2024. Now, net interest income was $412 million compared to $291 million. With interest rates still high, although reduced, but still high, expect them to make considerable amount of money thanks to that. Now, we've seen also that sales and marketing was a bit higher as well, $184.7 million. So depending on how many members they're going to add in that quarter, that could result in a higher or lower CAC. For those that needed a small reminder, this is what the CEO Anthony Noto said last quarter. We had an exceptional second quarter. Our relentless focus on product innovation and member growth across our portfolio of businesses not only drove strong results today, but we expect that they'll fuel financial growth for years to come. Our one-stop shop strategy continues to deliver strong, diversified growth and profitability despite macroeconomic volatility. Our financial services and tech platform segments now make up a record 45% of SoFi's adjusted net revenue, up from 38% a year ago and 32% 2 years ago. In the second quarter, these businesses grew revenue by a combined 46% year over year, given our clear structural advantages and leading value proposition in financial services, along with the tech platform's continued progress on its journey of becoming the AWS of financial services. To be honest, I've spoken about this in the past as well. If you keep on saying AWS of financial services, one, please give us more details during earnings reports, during earnings calls with regards to that side of the business. And then secondly, I don't use the app because it's not available outside the United States, but I've seen many of my viewers say the same thing. The app should be improved. Why is the UI not as good as the Robinhood, for example? So if you want to be called the AWS of fintech, maybe fix those things. Last thing here, despite the rate environment and our conservative stance in lending, we drove sustained strong results in the quarter and are ready to move quickly once things improve. Things are already improving, so that should benefit SoFi. As for the technology platform, as we've seen at the start, that generated $95.4 million in revenue, an increase of just 9% year over year, and the contribution profit was $31.2 million. That's an increase of 82% year over year for a margin of 33%, and was also actually up quarter over quarter. That was not the case before. So overall, net members increased 41% year over year, now close to 9 million members. So if we expect them to add another over 600,000 members in Q3, then we're going to get quite close to 10 million. As for products, that has increased 36% year over year to now 12.8 million. And Galileo accounts increased 23% year over year to 158 million. But as you can see right here, Q3 and Q4, that's where the year-over-year comparisons are or could get a little trickier because, well, Q1, Q2 was a bit weak in 2023. As for guidance to Q3, that's the expectation of the company. Adjusted net revenue between $625 and $645 million, representing 18 to 22% year-over-year growth, and adjusted EBITDA to come between $160 and $165 million, and adjusted EBITDA margin of 26%. If we then look at the full year 2024 guidance, they expect the following: financial services net revenue growth of more than 80% versus 2023 levels, lending adjusted net revenue of at least 95% of 2023 level, tech platform net revenue percent growth of mid to high teens versus 2023 levels, and then GAAP net income between $175 and $185 million, and this includes a gain of $59 million of the extinguishment of debt in the first quarter. As for GAAP diluted EPS, 9 to 10 cents, between $800 and $1 billion of tangible book value growth, and total capital ratio of 16% at year end. And this guidance assumes a 50-50 revenue split between lending and the combined tech platform and financial services segment. Oh yeah, going back to the tech platform thing, as always, we're going to see if we get some updates with regards to these comments right here below. So they said, our pipeline of interest remains robust and includes US and international financial institutions, along with major consumer and commercial brands. We continue to pursue enterprise partnerships with larger existing customer bases for more durable revenue opportunities. These partnerships take multiple quarters, not months, to win, and have longer integration cycles due to their size and complexity. I mean, we've seen these comments already for numerous quarters, so let's see. Well, let's hope to get an update on that. All right, so the estimates right now, this is the last time we did this. So last quarter, these were the estimates from analysts on Coifin. Link is in the description if you want to use my code, my link, to get 20% off for that platform. Thank you to all that have been using actually the link, especially in the last couple of weeks. Really appreciate that. So we can see that the estimates have actually gone up. So fiscal year sales growth went from 16.41% to now 19.3%, and EPS 7 cents to now 12 cents. If we look at fiscal 2025 and fiscal 2026, about the same thing. Minor improvements for sales and EPS, but improvements nonetheless. As for the upcoming quarter, EPS normalized and GAAP, 4 cents. Revenues expected to be $633.8 million, and there were 9 EPS revisions on the upside in the last 90 days. And by the way, remember the long-term outlook that the company has given us. So for the 2023 through 2026 time period, they see 20 to 25% compound annual growth, assuming no meaningful change in the macro environment and no significant new business launches or acquisitions. They also see 20 to 25% EPS growth beyond 2026. On the profitability front, bridging down the GAAP EPS, we expect to generate 30% EBITDA margins by 2026 and 20% GAAP net income margin by 2026, and stock-based compensation is expected to be high single digits as a percentage of revenue. So you put all of those CAGRs and the profitability targets into place, and that gets you to your 55 to 80 cents of GAAP EPS that we're really confident about. As I've been saying in the past, as long as these targets do not get revised on the way down, I have no reasons to start being bearish or doubt management. Overall, if we look at what the analysts are expecting all the way through 2033, we can see that the average year-over-year growth rate for EPS is 35%. Of course, there are not that many analysts modeling all the way through 2033, so do with that what you want. If you look at the sales growth, that's around 11.8% for the same periods. Now, these are my predictions for SoFi. So it's actually Q3 new members, 650,000 new members, and a CAC of $292. So I expect sales and marketing to actually be up quarter over quarter. Galileo Q2 revenue, I still expect it to reach $100 million. I've been wrong before, so let's see if finally we can reach those numbers. Q3 net revenue of $650 million, so again, exceeding their own guidance as they've done in the past, around the same percentage. And adjusted EBITDA, $166 million, and deposits, I expect it to go back to $3 billion, unless, of course, we've seen the same thing as Q3, and those time deposits are not replaced by something else. So these are the predictions, and of course, when we'll get the numbers, we're going to see how wrong or how right I was. Hopefully, I'll be wrong again, but wrong because I was too conservative, as that was the case in the last 2 quarters. And so right now, finally, we have broken out of those boxes right here, right? I made those boxes, I think, a couple of videos ago. We can see here box number 1 started April 2022, and then we broke out of it 441 days later. Then box number 2 started here July 2023, and finally we broke out of it 476 days later, and this time actually before the earnings report. Plus, yes, we are overbought right now, but again, we've seen that before. You can stay overbought for quite a long time. Plus, right now, yes, just under $11, but we have been higher before. Back here, July 2023, earnings report, the pump, and then the usual dump that followed. Afterwards, we've reached actually $11.70 or so. And it could be very interesting to see if we get great results for a quarter, great commentary, great guidance, then yes, I could see us push and go even higher. So overall, that's about it for me with regards to SoFi. We're going to cover SoFi, PayPal, Alphabet, Microsoft, Intel, all the companies in the next coming days. So be sure to subscribe, like, so you don't miss any of these videos. Share your comments down in the comment section, and I'll see you all in the next one. Bye-bye.